Joining me today is RJ Gallo. He's a senior portfolio manager and head of the municipal bond investment group over at Federated Investors. RJ, thanks for joining me. It's interesting. We haven't heard a whole lot from Amazon about the location of their second headquarters since they narrowed down their list of cities to the final 20. I wonder, as we head into the second half of this year, what does your credit analysis show you about which cities are poised to benefit and when we might hear?
Oh, good morning, Taylor. Thanks for having me back. It's a good question. I'm in Pittsburgh. This city is on the list of 20 that are finalists for HQ2. Generally speaking, it's abundantly clear that it's a huge regional economic opportunity for Pittsburgh and the others that are on the list. Amazon tells us it's 50,000 jobs. There was a study done for the state of Maryland back in February suggesting it's actually twice that when you consider the regional economic multipliers. So undeniably, this is an opportunity for those 20 cities. It's a bit of a horse race, and there are rumors out there. We're watching it. I can't say we're trying to speculate on where it's going to end up, however. If it does happen here, or if it ends up in Northern Virginia, to be sure, the regional officials who've been putting forth subsidies to try to draw HQ2 will be very happy with their investment, we believe.
I want to talk a little bit about fund flows, because last week we saw the first redemption according to funds that report weekly to Lipper, and that was after 8 weeks really of solid inflows. How much cash are you holding to prepare for these redemptions, and when do you expect these redemptions to really pick up?
Well, so far we've been sort of on redemption watch, and it hasn't happened. Yields have risen. Typically, when yields rise, as they have this year, you might see some investors fleeing fixed income. Haven't had that dynamic at all. Maybe it's the tailwind of the tax bill. There's plenty of people out there who are frustrated about the SALT deduction cap of 10 grand, and they would prefer to find other ways to ease up the pain from the tax man, and they're buying munis. So muni funds are still growing. If interest rates keep rising in a moderate fashion, which is our call, we might not have that redemption surge. The market's held up relatively well. Returns are low, yes, but we still think that investors see value in munis. Now, clearly, insurance companies, banks, they reacted to their massive tax cut, but individual investors have not. So we're really not on redemption watch. Our cash balances are relatively low, and we're pretty much fully invested.